On July 2, 2026, a Finnish company named IQM Quantum Computers pulled off something no one in the quantum computing world had ever managed before. They rang the opening bell at the Nasdaq Stock Exchange, becoming the first European quantum computing firm to list on a major American exchange. The valuation stood at $1.9 billion. The capital raised came to $226 million after expenses. The moment was, without question, historic. 8 years of effort, 420 employees, physical quantum computers placed at supercomputing centers throughout Europe, and now at Oak Ridge National Laboratory in the United States, a cloud service, genuine paying customers, and a dual listing on both Nasdaq in New York and Nasdaq Helsinki in Finland. By any traditional yardstick, this was a win. A European deep tech startup breaking onto the world's most respected technology exchange, signaling to the world that Europe's quantum sector had truly arrived. Then someone actually opened the IPO prospectus. Tucked inside the legal disclosures that every publicly listed company must file, the paperwork almost nobody bothers to read, IQM's own lawyers had written a line that stopped the entire quantum computing industry in its tracks. It read, "Large-scale commercial traction of quantum computing technology may never occur." May never occur. This isn't coming from a critic. It isn't a skeptic writing a hot take on some tech blog. This is IQM Quantum Computers itself, the very company that just rang the Nasdaq bell at a $1.9 billion valuation, the company pouring hundreds of millions of dollars into building superconducting quantum processors, the company whose CEO told TechCrunch that nobody, not even a company that manufactures quantum computers, can say when quantum advantage will actually show up. That admission, made on the exact day IQM went public, is arguably the most candid and consequential statement anyone in the quantum computing world has made publicly in years. And making sense of what it truly means for IQM, for the wider quantum industry, for the investors funneling billions into this technology, and for everyone who's been following this revolution with real enthusiasm requires digging well past the headline. Like and subscribe right now, because this is one of those stories where the complete picture is far richer, more layered, and more important than any single quote could ever convey. To grasp why IQM's disclosure in that prospectus matters so much, you first need to understand the quantum computing industry's default communication style over the last decade, because what IQM just did breaks sharply from it. This industry has lived in a permanent state of almost there for longer than most of its own investors have been paying attention. Every year brings a fresh milestone, a new qubit record, a fidelity breakthrough, another demonstration of quantum advantage on some carefully chosen benchmark. Each one gets announced with breathless excitement. The press releases pour out, valuations keep climbing, government funding programs multiply. Underneath it all sits an unspoken promise: commercial quantum advantage. The moment quantum computers start outperforming classical machines on real-world problems, at a scale businesses can actually pay for and depend on, is just around the corner. Not necessarily this year, but soon, imminent. The horizon keeps inching closer. What the industry has rarely done in public, in a legally binding document, in a filing that investors buying the stock will read and rely on, is admit that the horizon might never actually arrive. That the technology, for all its scientific elegance and theoretical power, might simply never cross the line from a stunning lab phenomenon into a commercially scalable product. By including that sentence in their prospectus, IQM didn't damage quantum computing's reputation. They spoke a truth that every serious scientist and honest investor in this space has quietly known for years, one the industry's promotional machine has consistently smoothed over. And the market's response told its own story. IQM's shares spent most of their opening trading day sitting below the IPO price. Not a surge, a fizzle. The kind of tepid welcome you get when investors actually read the fine print and discover that the company they're buying into has legally disclosed, under securities law, that the very thing they're betting on may never scale commercially. Like and subscribe, because what IQM admitted in that prospectus is the launching point for understanding exactly where the quantum revolution really stands in the summer of 2026. IQM Quantum Computers was founded in 2018 as a spin-out from Aalto University in Espoo, Finland, the same tech hub near Helsinki that gave the world Nokia, Linux creator Linus Torvalds, and several of Europe's most significant technology companies. Its founders were quantum physicists, convinced that building practical quantum computers demanded a full-stack approach, not merely designing the qubit architecture, but engineering the control electronics, the software layer, the cryogenic systems, and the calibration tools as one unified system, rather than stitching together components from separate vendors. That integrated philosophy has made IQM a genuinely serious competitor. By the time of the IPO, IQM had pulled in $600 million in total funding, including a September 2025 Series B round that was, at the time, the largest quantum-focused Series B raised outside the United States. The company grew from 8 customers in 2024 to 22 in 2025. Its hardware now runs at VTT, Technical Research Center of Finland, and at the LRZ Supercomputing Center in Germany. It had just installed its first American quantum computer at Oak Ridge National Laboratory, the same facility housing Frontier, the first exascale classical supercomputer in the U.S., and the same site where NVIDIA's NVQ-Link quantum GPU bridge infrastructure is being tested. IQM also runs a Munich quantum data center hosting 6 quantum systems accessible via the cloud. Its Munich development center employs more than 100 engineers, though 2/3 of its 420-person team still works out of Espoo. CEO Jan Getz, a quantum scientist who once held an academic post at Aalto University, has steered the company from a university spin-out into a billion-dollar-plus global hardware business in 8 years. By any measure, IQM is a real company, with real technology, real customers, and real revenue. The prospectus admission isn't a confession from a company with nothing to show. It's the confession of a company that has built something genuinely impressive and is still honest enough to say that the biggest question of all, when does this become commercially transformative at scale, doesn't have a certain answer. That honesty deserves to be understood, not sensationalized. The specific phrase in the prospectus that large-scale commercial traction of quantum computing technology may never occur is exactly the kind of language securities lawyers call a risk factor. Every company listing on a public exchange is required to disclose the material risks that could derail the business as planned. Drug companies disclose that their drug candidates might fail clinical trials. Space companies disclose that rockets might explode. Software companies disclose that their products might get overtaken by competitors. Risk factors exist for legal protection on the company's side and informational fairness on the investor's side. But they're also a kind of mirror. They reveal what the company's own lawyers and leadership genuinely believe represents real material uncertainty about the business, not hypothetical edge cases, but actual possibilities that could keep the stated business model from working. A quantum computing company whose risk factors include the possibility that large-scale commercial traction may never happen is telling you that the timing question isn't just fuzzy in the way any new technology's timeline is fuzzy. It's uncertain in a deeper sense, that the physics, the engineering, and the market conditions required for quantum computers to deliver value at scale might simply never all line up within a time frame investors would consider meaningful. This is honest. And if you've been following the technical literature closely, it's entirely consistent with what the most rigorous quantum scientists have quietly said in academic circles for years, even while the industry's marketing has told a far rosier story. The gap between the language in IQM's prospectus and the language that's dominated quantum computing investor pitches and press releases for a decade is the gap between what the people actually building this technology know and what the people selling it have been willing to say out loud. IQM just closed that gap, and that's an uncomfortable moment for everyone in the industry who's been standing on the selling side of it. Like and subscribe right now, because what comes next lays out what the honest technical picture actually looks like, stripped of the hype. Here's the fair technical assessment of quantum computing as it stands in the summer of 2026. Extraordinary scientific progress has genuinely been made. The demonstrations are real. The records are legitimate. Google's Willow chip demonstrated below-threshold quantum error correction, proving for the first time that scaling up a quantum processor actually improves its accuracy instead of degrading it. HSBC and IBM showed a 34% improvement over classical methods in bond trading prediction, using a hybrid quantum classical workflow on real production-scale data. The Quantum Echoes algorithm produced a result on 65 qubits that the Frontier supercomputer would need roughly 3.2 years to replicate, and that result was independently confirmed by a separate quantum machine. None of this is exaggerated. It's peer-reviewed, published, and in HSBC's case, backed by a major financial institution staking its own reputation on the result's accuracy. The physics behind quantum computing works. The hardware, while still difficult and costly to build, has crossed several milestones the field considers foundational for fault-tolerant computation. Quantum advantage on specific, well-defined problems is real and proven. And yet, and this is the truth IQM's prospectus captures with unusual precision, none of that automatically translates into commercial scale. Quantum advantage on a carefully chosen physics simulation or a bond trading forecast is not the same as quantum advantage across the broad range of commercially important problems that would turn quantum computers into a product businesses buy and rely on routinely. The road from today's quantum hardware to a fault-tolerant machine capable of running Shor's algorithm to break RSA 2048 still needs orders of magnitude improvements in error correction, qubit coherence, logical qubit counts, and system integration. The road from the HSBC IBM bond trading result to a product a mid-sized bank actually runs in production across multiple use cases requires hardware that's far more reliable, more accessible, and cheaper to operate than anything available today. IQM itself grew from 8 to 22 customers in a year, impressive for a quantum hardware company, but still a tiny number compared to the scale at which commercial technology usually operates. As TechCrunch noted in its IQM coverage, demand won't truly scale until quantum advantage has been shown across a much wider range of complex, lengthy, practically meaningful tasks. And nobody, not IQM, not Google, not IBM, not any national lab or government program funding this work, can say with confidence when that will happen, or whether the specific threshold the market needs will be crossed within the timeframes investors are expecting. This is where IQM's story links up with the wider quantum investment landscape, in a way every investor, enterprise tech leader, and policymaker following this space should understand clearly. The quantum computing sector attracted $56.7 billion in cumulative public funding and $4.9 billion in venture capital by 2025, according to the Quantum Economic Development Consortium's State of the Global Quantum Industry 2026 report. These aren't trivial figures. They represent a meaningful slice of the global deep tech investment world, betting on a technology whose own builders have disclosed may never reach large-scale commercial traction. Investors are doubling down on quantum companies, and, as TechCrunch reported in its February 2026 coverage of quantum investment trends, doing so with a second fund that shows quantum still has believers. They're betting that the technical progress is real and the commercial upside genuine, even with an uncertain timeline. And they aren't wrong that the technical progress is real. The real question is whether that timeline uncertainty is being priced correctly. IQM stock spending its first day below the IPO price suggests at least some public market investors think it isn't. The route IQM took to go public, merging with a blank check company called Rearray AQ, has historically drawn a skeptical reception from retail investors, precisely because it lets companies go public without the traditional roadshow scrutiny that a standard IPO with book building and institutional investor engagement provides. The lukewarm reception may reflect SPAC fatigue as much as quantum skepticism, but it may also reflect public markets starting to hold companies to a higher standard of evidence than private markets have, one where the question of when matters just as much as the question of whether. The European competitor Pascal, which uses neutral atom technology rather than superconducting qubits, had also announced plans to go public via SPAC in March 2026, valuing itself at $2 billion. Whether Pascal follows IQM's lead in disclosing the full scope of uncertainty in its own IPO documents is something worth watching closely. The precedent IQM has set, honest disclosure inside a public market filing, may end up becoming an industry standard, whether other quantum companies adopt it voluntarily or are pushed into it by securities regulators who've read IQM's prospectus and started asking tougher questions of the next company in line. The European angle to IQM's story adds a dimension that American coverage of quantum computing often misses entirely. Europe holds the strongest tradition of foundational quantum science anywhere in the world. Max Planck, Albert Einstein, Niels Bohr, Erwin Schrödinger, Werner Heisenberg, the first quantum revolution was, in large part, a European intellectual achievement. The Nobel laureates who built the experimental groundwork of modern quantum physics, Theodor Hansch, Alain Aspect, Serge Haroche, Anton Zeilinger, and John Clauser, are European. Europe's universities and research institutions have produced more foundational quantum physics than any other region on Earth. And yet, as the European Commission's own Quantum Europe strategy, published in July 2025, openly acknowledges, Europe has historically struggled to turn that world-class scientific excellence into commercial quantum companies capable of competing on a global scale. The European Quantum Flagship Program, launched in 2018 with a €1 billion budget, was designed to close exactly that gap, to fund the translation from scientific leadership into industrial and commercial quantum capability. IQM stands as one of the flagship program's most successful direct outputs, built on Aalto University research with substantial backing from Finnish public funding, including TESI, Finland's sovereign wealth fund. The fact that IQM needed to list on NASDAQ, on the American exchange, to access the capital and visibility required to compete globally is itself a telling commentary on Europe's ongoing struggle to build capital markets capable of financing deep tech companies through the long, expensive, uncertain path from scientific discovery to commercial product. CEO Jan Getz voiced pride that IQM became the first European quantum company on a major U.S. exchange, while carefully adding, "It always feels good to be first, but ultimately, it's about long-term success." That careful qualifier carries more strategic wisdom than it might first appear to. Being first on NASDAQ matters for visibility and for proving that European quantum companies can access American capital markets. Whether that access to capital actually translates into the long-term success that justifies the valuation is exactly the question the prospectus itself has flagged as genuinely uncertain. And the European Union's pending Quantum Act, expected in 2026, along with the EU's announced investment of over 37 million euros into AI and related technologies in January 2026, reflects Brussels' growing recognition that public capital alone can't substitute for the deeper capital market development European deep tech genuinely needs. Like and subscribe, because what comes next for IQM specifically says a lot about what an honest path forward for quantum computing could actually look like. IQM's strategy under Jan Getz is worth studying closely, precisely because it doesn't hinge on the assumption that broad quantum advantage is right around the corner. The company sells physical quantum computers, actual hardware installed inside data centers and supercomputing facilities, alongside cloud access to those same systems. Its deployment at Oak Ridge National Laboratory places it directly inside one of the most important scientific computing facilities in the United States, at precisely the moment the U.S. Department of Energy has committed to deploying the world's first fault-tolerant, scientifically relevant quantum computer by 2028. Getz told TechCrunch that IQM stands to benefit directly from that DOE commitment, and he's right. A quantum hardware company with equipment already running at Oak Ridge is well positioned to be considered as the DOE's HPC quantum ecosystem expands alongside accelerating federal investment. IQM's Munich Quantum Data Center, hosting 6 accessible systems, represents a European cloud quantum computing resource giving researchers and enterprises access to superconducting quantum hardware without needing to install their own cryogenic systems. And the company's emphasis on practical, installable systems, quantum computers mounted in standard 19-inch server racks that connect to ordinary cooling water, power, and network lines, rather than requiring elaborate facility overhauls, reflects a hardware philosophy built around making deployment simpler and less operationally demanding than the dilution refrigerator setups most competing superconducting approaches require. The customer growth from 8 to 22 marks the start of a commercial track record, not its conclusion. And the fact that some of those 22 customers come from the private sector rather than entirely from academic and government research is meaningful in itself. It suggests the commercial applications case is starting to take shape, even if it hasn't scaled yet. But none of this changes the honest assessment IQM's own prospectus laid out. The path from 22 customers to commercial traction at the scale that would justify a $1.9 billion valuation runs through a series of technical and market milestones that can't be guaranteed, can't be scheduled with any certainty, and can't be promised to investors on a timeline any rational analyst would endorse with real confidence. What IQM did by putting that sentence in their prospectus is what every company in this space arguably should do, and almost none has been willing to. They told investors the truth, accepted whatever short-term market reaction that honesty produced, and chose credibility over a polished sales narrative. So what should the rest of us take away from IQM's admission? A few things. First, for anyone investing in quantum companies or quantum-adjacent stocks, quantum computing remains one of the most genuinely exciting technological frontiers in human history, and the scientific progress is real and accelerating. But it hasn't yet demonstrated the breadth of commercial applicability that would justify treating it with the same confidence you'd apply to cloud computing or AI software. The investors who come out ahead in quantum will be the ones who understood from the start that they were making a long-duration bet on a technology with an uncertain commercialization timeline, not chasing a near-term growth play. Second, for enterprise technology leaders, the sensible strategy for quantum engagement right now is a hybrid one. Use existing quantum cloud platforms from IQM, IBM, and others for the specific research and optimization problems where early quantum advantage has already been shown. Build post-quantum cryptography migration into your security roadmap because that risk is real and time-sensitive, regardless of when commercial quantum advantage arrives. And build organizational quantum literacy now so that when the technology does scale, your institution isn't starting from zero. Third, for the broader public following this story, IQM's admission is actually a reason for more confidence in the quantum industry, not less. A technology whose advocates are willing to disclose the full scope of the uncertainty in legal documents is a technology whose claims deserve more trust than industries that oversell relentlessly and only adjust expectations when forced to. IQM rang the NASDAQ bell on July 2, 2026, and in the same breath told the world that the technology it's commercializing might never achieve large-scale traction. That combination of ambition and honesty is rarer in the tech industry than it should be, and if this video helped you understand not just what IQM admitted, but why that admission matters and what it tells us about the true state of the quantum revolution in the summer of 2026, then please like this video and subscribe to this channel. The quantum story is still being written, the most important chapters are still ahead, and the people who will understand those chapters most clearly are the ones who started by understanding the honest baseline, which IQM, to its considerable credit, just handed to all of us in a legal filing anyone can read.